Hi, this is Richard Quinn from Forex Beginners, and today you're watching the second of 3 videos we are releasing on Forex indicators. Just before we start, please do hit that subscribe button below, as we really appreciate all your support. They even give us a follow on Instagram where we're posting daily content. The name is FX Beginners. So we'll get straight into it. So today is a relatively short video on an indicator, and that indicator is called moving average. Now, in this video, we're only going to be discussing 2 types of moving averages, and that is simple and exponential. Now, the purpose of these 2 moving averages is the same, and that is to smooth out price action, but there's a minor difference in the way that they are calculated. A simple moving average is calculated by taking the closing price of each day within your defined period and dividing that total by the number of periods. Then with the exponential moving average formula, there's a slight variance, meaning that more weight is placed on the recent day's pricing. Now, we aren't going to go into depth about how these 2 formulas vary from one another, as you'll find most charting software actually do all these calculations behind the scenes and leave you with the finished product. So that covers the basic theory of moving averages, and now you're probably wondering how you can integrate this into your trading strategy. And this bit is really simple. All we look for are crossovers of our moving averages. So on this chart you can see here we have a 20-day moving average, which is the upper, and a 10-day moving average, which is the lower. Both of these are exponential moving averages. Now, looking back to March/April or mid-April, we can see that we had a crossover of these 2 moving averages, and after that crossover we've now had this huge downtrend. Now, given that we look for 3 confirmations before taking a position, we wouldn't have taken a position based on this crossover signal alone. However, at the time it would have provided us with very important information about the future of that trend, which would have contributed to our analysis greatly. So that concludes video number 2 of 3 on Forex indicators. Now, just a reminder, please do hit that subscribe button below, and please do visit our website for much more free content. Thanks very much for watching, and I hope to see you again soon.